Okay, okay. All right, guys. So, welcome to the hunt for tonight. Uh, yeah. So, first things first, let's look at the trade I suggested last week. Okay, this is it. So, I was suggesting Palladium. Sorry, I had an errant tongue when I was speaking. I was calling it platinum, although it's a part of the platinum group, but palladium is a rare metal than the normal platinum. Um, but so far we saw that 3 days into the week, we saw a bit of upward side, but from Thursday to you know um, Friday, price really dropped so hard. That is a bit of the strength we've been seeing from the dollar. You can see that even silver, gold, and silver had the same. But however, if you notice one thing, you will notice that there were 4 down days for gold, also 4 down days for silver during the week. But however, on our recommended trade, they were just Thursday and Friday. So my idea for this trade will be for entry sake. Now I'm still long. Sorry, I'm still long. Like I'm still bullish on the trade. But however, I wouldn't enter now. Probably wait for the next bullish cross on this stochastic. So the stochastic, if the setting is basically the normal default setting that comes with MetaTrader 4. So 533 setting. So yeah. So that will be my position for this trade. Now, if you are not in already, if you are in, you probably should just still wait. So maybe, well, however, if price start to close around this area, around the 2000 to let's say 197 area. Price could not reach, not just get there, but close there at any day. I would leave that position. I would not enter again and wait for a good, balance to come back to the market for a good re-entry. So that would be my thoughts. So if you are ready, I'm just this will be a closing trade. Although our stop loss is on this level, but in terms of closing the position, I would really would rather wait to the price to close here. Doesn't need to touch my stop loss, but if you close here, I will get out of the position. So my stop loss doesn't necessarily mean price always has to touch my stop loss. So that's one of the ways you get to get small loss and big wins. So the price does not always need to touch. If you touch your stop loss, that's just the maximum you can lose, meaning that you can still lose uh, smaller amounts. So yeah. So today we'll be looking at a trade. Um, I want to suggest. Okay, so the same strategy. This is just my technical analysis kind of pattern. Uh, so this green line is the 200-day moving average, red line the 10 period moving average, 20 period moving average. So not much stuff. Uh, so mind you, one thing you should note is not just for you to learn how to um, in terms of okay. So I guess I'm making that error again. I'm not sharing my screen yet. Yeah, let me share my screen. So let's go back to the palladium trade. So the palladium trade, I was saying, um, we saw 3 days move upward and 2 days down. So from Thursday and Friday, there was strong downward movement. So my idea would be for us to more like wait for a re-entry. So my re-entry will be a bullish cross here. So if um, this blue line cross. So that will basically be it. So if you are on this setting, the 533 setting, this default setting for the stochastic, and so that will be my um, re-entry. So I'll wait for that to happen. So and the price close. So something now again I mentioned, although I was not sharing my screen then. So I was saying once price close to at this level or close around this level, um, if you are on the position already, close it. Okay, so that's just what I would look out for. So the meaning that this basically what I'm trying to say is this my 10 period moving average closes below the 20 period moving average, then I'll close that position. It's just simple as that. Um, so we look at gold. Nothing much seems to be happening to yeah. By the way, this is silver, by the way, not gold. Um, silver looks that is looks like there's an uptrend, uh, but the silver now is already bounced, taking a strong resistance from the 200-day moving average. So the 200-day moving average is a simple moving average. So this 200-day moving average has formed a strong resistance here for silver, and the 200-day moving average seems to be sloping down also. So that's to me is bearish. That to me is bearish. Um, so for silver, a breakout of this trend line might mean a good risk to reward kind of trade. So if we get the breakouts here, say here for the entry, um, stop loss ideally it should be at least here. So we can get, and this breakout can come in here too. So it doesn't really matter. So it depends on where you get the breakout. But if it's not here, usually it will continue to go up. But once it comes from here, so you probably want to avoid. But year to year, this is where let me just do the so from year to year, will probably be where I think a valid breakout can occur for us to say go down move. So take profit target mainly should be around this level. So yeah, this would have been a good trade to take. So this type of risk for this type of reward. I've always said when you take trades, look for trade that gives you opportunity to put in small risk for the possibility of good return. So that's what you want, so that you don't have to win all your trades. So good trading doesn't necessarily mean you are winning all your positions. Just means that whenever you take trades, your winners are on average larger than your losses. So that's what proper trading is really all about. And also meaning that with all that you are doing it in a good environment for your portfolio. Whenever you combine assets together, you are combining them in a way that does not skew you to be in favor of a particular pair or a particular asset too much that you are now overweighted on that side of your account. So usually for somebody like me that trades on the daily, I have lots of trade usually running, except for times where I close some of the position and trying to get new entries. But usually on average, I tend to have positions running on my accounts. So that's the way I trade for myself. That's my own trading psychology, and how I manage my own portfolio and all that. But if you are day trading, you usually will not be doing that. But if you trade on the daily time frame like me, you want that so that you have a lot of trade running. So you're always looking for ideas to put. So before you put on ideas, you have risk parameters and see if your portfolio will allow, not just for you to have an idea, you need your portfolio to allow for you to get that idea on it. So I can have an idea, but sometimes my portfolio will not allow me to put on that trade. Why? Because if I put on that trade, that might mean I'm overweighting on a particular currency or a particular economy or a particular region or something like that. So we can be careful on that side too. Um, yeah, so my trade idea for this week will be GBP AUD. So GBP AUD, I like momentum anyway. So if you already know from by now, so when you start following me, you see that I like ideas that carry momentum. Um, I'm I'm impatient with losers and I'm patient with winners. So um, this trade is a very simple trade. It's basically textbook technical analysis. Um, so if you understand tech analysis, should already know this by now. So one of the best way I draw my trend lines is converting my chart to a line chart. So this gives you all the point for all the closes of the day. So you see it more clearly, it's more clearer, so neater. So now we've changed to, so you can see that price already broke out, already broke out and tested. Now it seems like it wants to continue. And the stochastic is still in, although it's showing overbought. One of the things about this stochastic setting that I like a lot is the fact that a lot of people trying to consider overbought, oversold. I don't use stochastic or often the RSI so much for overbought and oversold. So if you have followed this year, you wouldn't buy and price gone up. So the real thing for stochastic, why I like it over the RSI, is the fact that it tends to signal momentum. So when this line now, this blue area is above this red one, it's just telling us that price momentum is on the bullish side. So that's something we we have to um, pay attention to also. So this trade idea basically for me will be entry here. This area will be our entry. So my stop loss will be 2 times ATRO. So that's like ATRO, the 15 period ATRO, that's 136 times 2. So 136 times 2. 136 times 2. So let's do that calculation. Uh, so by the way, I gave like a stop loss calculator that's on my last trading school. So if you don't have that already, you can check that out. Um, okay, let me see if I can put it up, if I can bring it out, and just show you a quick way of doing it. Uh, okay, so this is the file. So if you have the file, you can. I'll see if I can also share the link of this file. You can get it on the description of this video. So in case you are watching it on a later date. So this is how I'll practically do this. I'll come here. So the ATR is telling me one. Um, so in terms of PIP, 136. 136. I just come here. I'll type 1 136. 136. So exchange rate now, I'll look for the code currency. What's the code currency? Our code currency is GBP AUD. So GBP AUD might so this is already giving me 0.72. So basically how I get that 0.72 will be what does $1 cost in Australia money in terms of the Australian dollar. So let me open the market watch and see AUD USD AUD USD what's that now? AUD, okay, AUD USD. Okay, so 102. That's sorry, 0.722. So you just need the first two decimal. So it's 0.72. So I just come here 0.72. That's it. So to update the lot size that I can use. So if you're having a 100K account, put that depends on the account you have 10,000. This works on the cent account this way too. So if you have a cent account, you can still use it cent in thousands of cents too. So it works the same way in the lot size you can use. So for a 10K account, and for the risk of 1%, I can use a lot of 0.51. So that would, you know, for in terms of pip risk, will be 272 to 272 pips. Let's do the maths here. This 272, 272. Oh, sorry. We should add a zero here because I'm using five decimals. So the actual lot will be like 0.05. So it's correct. So I times it times 100. So our pip risk will be 2720. So yeah. So these are the simple stuff like even me. This is stuff I use almost every day. So you want to be careful when you are doing some of all this maths. 272. Okay, sorry. Yeah, I'm online. I'm online. I guess we had a little bit of technical um issue. So I'm coming. Let me share back my screen. So yeah, welcome back again. So where were we? Where were we? So yeah, where I was saying um this will be the trade idea following the close to the trend line. I'm drawing it based on closing price, not on weeks. So you can see there was a breakout and tested. So that's where uh, our push is coming from, and also the idea of a bullish momentum sign from the stochastic side. So this area definitely will be the entry. So based on our an ATR, we got a stop loss of um about 20, but just say 2,720 pips or points. I can say so. So that level will be this 2,700. So that will be 1.828. So 1.828, 1.828. Where's 1.828? Okay, 1.828. So, okay, so around here, let's say, yeah, around here, around here. Now it will be my stop loss. So take profits depends on how the trade keeps on going. So usually my take profit is just basically when this 10 period moving average crosses below the 20 period moving average, and usually that's just how I close the position. It's that simple, not too much story. Just like here, it's close enter here, basically close on here. So it's just normal, like that's where I would trade it. So that's where I would advise if you want to trade it, to trade it. Um, So yeah, but although we'll see some resistance, obviously, before we get to, and that can also be opportunity to add to the position. So there's another skill you need to learn of add when to add to position. So all that you learn when you are inside Suavely markets, any of our programs or the mentorship side will teach you how to enter markets that is trades you're already on, and how to push your positions to that is increase or your position, not when you are losing, but when you are winning. So when you are winning, it's good to always put more money on the line for that position. And also adjusting the risk. So not like you're just putting more money and risking more, but you're putting more money and risking less. So there's a trick to that. So yeah, we obviously see. Um, so this trade, not a bad trade. Believing that the stop is wide because so far volatility seems to be picking up and you want to account for that type of swing. So ultimately, we're thinking maybe price can get to this level. Obviously, maybe get here. Maybe we might see a correction, and or maybe we can just see something towards this place. So that would be the rational I'm thinking of. So this. definitely just accounting for this resistance on this level, then before we start to think of getting to this level. So definitely we can break this level, we can also correct. So um, this might take us some weeks to achieve. So let's see, maybe almost at least maybe a month to get done. So sometimes might not be, but let's just say 20 days, 20 trading days. That's like a month. Um, so yeah. So that's my thoughts on trading opportunity hunts for this week. Um, Tonight market open. I feel comfortable buying GBP So, and by the way, I got the fundamentals lined up also for this. So I didn't just pick this pair. So in terms of the fundamentals, definitely I've checked them out. Um, I compared the unemployment rates, compared the GDP, and I also compared the inflation on this country. So based on that, seeing that the inflation for the pound seems to be kind of bad or getting worse than Australia. And the pound also was seeing the GDP rise. So GDP for like, in terms of um, the UK seems to have to be outperforming that of the Australian economy in the last few months, and also for unemployment. That's really where we saw some strength for Australia, but for the last release, the pound seemed to be doing better than the Australian economy. So that's what I really based it off on. So it was more like from those three metrics, um, the pound seems to have a better future, especially with the. I would have loved to show you that, but I think that's quite private for our inner students. Um, However, that was the way I actually picked this pair. So you don't know, so you don't think I went on and just pick it out of thin air. So um, yeah. So if you have questions on how you can learn more and all that, please feel free to share it on the comment section or go to our website, find our support, contact us. Um, yeah, so I guess that's where we end it for today's weekly trading hunt. We hope this hunt will be like 30 minutes. So yeah, we spent about so. And all right, so test this opportunity out. Go back to understand the rationale behind the trade again and see how it plays out for the week and weeks to come. Um, then you learn, and also we also advise if you have like a way you can um, look back test some of our ideas, do that because most of those ideas have turned to big winners, and we hope to show you some of the before and after of our trade ideas also, so that you see where we've shown great ideas also. So all right, have a good evening and blessed trading week. From us here at Suavally. Bye for now.